Welcome back, Alpha Hunters. The markets are closed for the week of March the 22nd. And if you remember, last week I said, you know what, maybe we start to have this pullback. But hey, you know what? Never fear. Monday opened, and we literally just gapped up. Now, there's some news that kind of surrounds this gap up here. It's a pretty good gap up here on the SPY, about 0.8%. Kind of going to that news, it involved kind of some bigger tech stocks maybe partnering. So we'll talk about that a little bit later when we get into that. Anyways, but yeah, nice gap up. There you go. Just kind of sideways though for the day. A little bit of a sell down there towards the end of the day, but not a big deal. A little bit of a lower open there on Tuesday. And then we just kind of traded higher pretty much for the whole day. There you go. It's kind of how it was. And then we got into Wednesday, Fed day. And you can see here the market reaction was very strong. Let's go and quickly talk about the Fed. Basically, we knew was not going to be a big deal on what they were going to do with interest rates this session. We knew they were going to leave them flat. The more shocking thing that really came from the Fed decision on Wednesday was the fact that their projection for the future kind of, plan to raise or cut interest rates, or where they see interest rates going forward for the next couple of years. They only update that plan like once every other Fed meeting. So I think 5 times a year they update that. Last time they updated it was back in December. And really over the past month and a half, we've seen quite a bit of inflation data actually start to turn higher. So with that, it was shocking that they didn't change their, plan from what they showed in December. So the market liked that because basically everybody thought that they would show a little bit of hawkishness, maybe cut off maybe one cut, maybe just go to 2 for this year. But they didn't. So the market just took off. And then we even had a gap up there on Thursday, kind of flat there to start the day, and it just kind of faded down then basically for the rest of the day. Ended on the session lows. Friday, kind of flat, choppy, not really too much going on. So outside of that Wednesday afternoon and then that Thursday gap up, it was kind of just done, exhausted, I guess. Don't be surprised if we continue to pull back a little bit early next week. And that's really kind of it. As far as what went on this week, I'll talk about one stock really kind of was leading some of the stuff that we saw early Monday, and then they had some other stuff kind of go on throughout the week. But I'll talk about that a little bit later. All right, here we go. We got sector rotation for the week. Real estate lagging behind here, which is kind of interesting because we did see yields actually roll over after the Fed policy decision there. You see, real estate did bounce a little bit, but came back down. So real estate, lower end of the week. You also got healthcare, staples, utilities, materials, energies lagging behind as well. Financials did very well after that Fed policy decision. They ripped it higher. It was actually probably the best performing sector, I believe, from just before that Fed policy decision till at least Friday mid-afternoon when I last looked at that kind of run. Anyways, tech also a little bit underperformer there. Outperformers, we only had 3 for the week: industrials, discretionaries, and communications. XLC there. All right, take a look at the VIX. What was the VIX doing for this week? Well, kind of been looking at this rising higher lows coming in. And guess what? We broke that this week, especially on that Wednesday. So there we go. Finally broke that, rising supporting line. And as for now, I wouldn't be surprised if the VIX just kind of hangs out. The DXY, well, given what the Fed said on Wednesday, you weren't going to be surprised on Wednesday when you saw the dollar drop. The more shocking part on dollar for the week was the rapid response that we got on Thursday and the follow through on Friday. Okay, so yeah, kind of crazy that happened, man. I didn't think the dollar was going to bounce back that sharply. I would not be surprised to continue to see the dollar go higher. GLD, well, GLD, if dollar's going higher, GLD and gold might struggle to go higher. I'm not going to say, it'd be a perfect correlation for gold to go down. Just might struggle. That's all. But other than that, I would still probably just be looking to be more bullish on any kind of significant pullbacks or any kind of meaningful dip buying opportunities. But yeah, that's all I got there on GLD. 10-year yield. Well, this is another one with what the Fed said on Wednesday. You would expect to have gotten absolutely crushed after Wednesday and like the rest of the week. And it really kind of didn't. And that was kind of an interesting thing. It did, we did make that run up to the yearly high here, at least on the 10-year yield. And, we did roll over from there. So we found out, if we are going to blow through there and make, a new high. Well, we didn't. We kind of just double topped there, and now we're just kind of rolling back down. But what was really interesting is like we were still seeing some strength here on the yields, kind of with these lower wicks that were coming in on Wednesday, Thursday, Friday. We actually did have a breakdown, but like we saw with dollar, on Thursday having a quick bounce back day. If that happens early this next week here on yields, and we get a quick bounce back day, yeah, we might see yields continue to go higher. I was just surprised that they weren't as weak as I would have thought. That's all I kind of have on that. I don't know if that means anything, but we will have to wait and see. The 30-year yield, it doesn't really look like it's in a disaster spot. And maybe it comes down, checks into this line, and bounces again, and then maybe it slowly gets pushed higher. I don't know. We'll have to wait and see how that kind of looks on yields. But for now, at least the uptrend, or the most recent uptrend over the past couple of weeks, is definitely broken. Might just chop around. We'll see if it continues to pull down next week. 10-2 inversion. Well, I think it's safe. We were definitely basing here. We definitely got that pop there on Wednesday. The 2-year really kind of got crushed Wednesday afternoon. So yeah, that's why you see a pretty good pop here on the 10-2 inversion. But it's coming back down. Maybe it kind of just continues to base in here for a little bit longer, and then we'll push higher as we go into April. Not really much to see. Still could just be basing, but maybe it's starting its up leg. We'll see. HYG, well, with the second half of this week, yields dropping off. HYG was pushing higher up until about Thursday, Friday, when yields kind of started having a little bit of support, I guess. But HYG bonds, at least, not getting through these highs that we've put in, back in December. So we got an interesting situation where we got a little bit of a top here, still just in this zone, the sideways zone. And we got the 50 EMA that has been supporting this bond ETF, pushing in higher. So we'll see what happens. And if we come back down, get through that 50 EMA, I would be a little bit more bearish. But right now, to me, clearly we probably need to break that 50 EMA or this top around 78. If we close and hold a close over that, maybe even 2 days over that, I would say look pretty good to be bullish. LQD, not bad. It looks like we kind of got a little base double bottom here. So it's kind of tough to say. We haven't really taken out this high from March. Yeah, that's about it. It could just be basing. It still could just be chopping sideways. And if it winds up dropping off later, we'll see. But as far as how that's going, here's the TLT. If the TLT makes a run back up to this downtrending high line, well, we'll see what happens there. Obviously, we got a support level here around 92 or so, a little bit over 92, and downtrending line. So maybe we'll see what happens here over the next week. I would say if you're trying to be bullish on bonds, especially like the TLT, you want it to see it rip higher. You want to see it to break this downtrending line, and you're probably expecting yields to drop off pretty good as well, especially like the 30-year yields. So that's what I would be looking for. If this can really break through higher, then rapidly early this next week, I would say yields are probably just going lower and bonds are going higher. If we go sideways here and kind of connect in with this downtrending line, like somewhere out in the future, just horizontally, yeah, I would say bond yields are probably just going higher, and bond prices, ETFs, are just going lower. All right, let's talk about what used to be the big one, AAPL. So this week was a busy week for this company, man. I'm not even gonna lie. The past couple of weeks have been kind of busy for this company. They stopped working on their autonomous car project. They moved all those employees over to their AI group, which I don't know if they actually had an AI group before that, or maybe they just made one with the engineers that were working on the car. I don't know. It just kind of seems weird because what comes after is really concerning if you're trying to be an Apple bullish investor here, because they then have gone out to try to acquire, or they are trying to acquire, a Canadian AI company. I forget the name of it, and that's kind of telling where they are right now with AI. Like, it doesn't seem like they had a plan. It doesn't seem like they had anything kind of in the works. And that was last week. And then this week, to start off the week, and why we gapped up here on AAPL and just, started off, Monday, even on the market gapping up. It was reported that AAPL, Apple, was working with, or in talks with, Alphabet, Google, for use of Gemini in the iPhone. And nothing had been officially reported, like no deal or anything like that. But apparently they were in talks. And that's all it was just kind of rumors. But apparently they were pretty good rumors, like from Bloomberg, pretty good sources apparently, to make it pretty credible that this is actually could be a thing. So that's another thing that kind of indicates that it does not seem like Apple has a game plan. So Apple did pretty good for the week to start out, and then they got schmacked on Thursday. And what this was the Department of Justice in the U.S. came out and said that they are filing an antitrust lawsuit against Apple. It was a pretty good read. We did on a live stream on Thursday. It was a Finance Yahoo article, and yeah, basically, it sounds like the Department of Justice actually has a pretty good case. So, really, one of the things that you need for these antitrust cases to really work is clear evidence of mindful intent to control the market and to influence prices. And if you've kind of paid attention to App over the past couple of years, they've definitely made some comments in the public that, yeah, they definitely have tried to do that. So it doesn't matter our opinions are, it just matters what they can prove in court. And I think the Department of Justice has a pretty good case. Now, as far as Apple stock, I've told you for a couple of years now, I would not want to be an investor in AAPL. They have not been one, in my eyes, that has any new revolutionary products. Like, I can't think of the last one really that was like, hey, they're in this growth area. I can't really think of any that they've released over the past several years. Their growth area is, their services sector, or the services business, and that's not high growth. That's just their growth. That is their growth, their earnings growth. So, they just released the headset wearable, the Vision Pro, and that is such a tough market. People don't like to have stuff on their face, and it's gonna be really tough to make that a mass product, a mass consumer product. And it sounds like they are way behind on what dominated the market last year, which was AI, and has dominated the market over the past year, which is AI. So I would I just don't know how much you want to be on that boat. And I get it; it's been a great ride for a lot of people, but I just don't know if it has it anymore. All right, so let's make the rundown. RSP here. Nice continuation this week. Coming into the week, kind of had a little double top action to end out the last week. Well, this week very easily just quiet day on Monday, pushed higher a little bit on Tuesday. Wednesday obviously exploded higher with the Fed news. Nice gap up there on Thursday. This looks pretty good. I'm not gonna say it doesn't. We definitely took out that double top high, pulled back pretty good there on Friday, and that's really it. The only thing that I'm gonna be watching, and I'll mention this when I get through the SPY, is basically the RSP, the Qs, and the SPY rolling down together. But I'll talk about that when I get to the SPY. The DIA, kind of very much like the RSP, very quiet day on Monday, pushed higher a little bit on Tuesday. Wednesday exploded higher. Obviously got that huge kind of gap up. Nice day there on Thursday, but nice sell down. Ended negative, pretty good there on Friday. So okay, that's for now. It looks pretty good. We got some pretty good compression. We got like the 10, the 20, and the 50 got a little bit closer, so we got a nice little exploded higher. Yeah, other than that, it looks okay. I would say if you're gonna have stop losses or alerts, you're probably definitely down below like these three candles here, the lower ends of March. Other than that, looks okay. Looks okay. I'd probably expect a little bit more of a pullback at least. IWM, well, this is another day of a false breakout of over this kind of like 206 zone. I mean, we'll see what happens, but I like the IWM. I'm not gonna change my tone. Comparing the IWM especially to the Qs. I like the IWM better than the Qs, but yeah, it looks okay. Just sometimes this thing looks really good. Sometimes this thing just doesn't, and it looks bad. The only thing I would say is I just would rather be in the IWM than the Qs. The Qs. Okay, so speaking of those Qs and wanting to be in the IWM over the Qs, yeah, the Qs have had a great run. I think Apple is starting to get really dethroned. It's going to be very tough for the Qs to continue to go higher, and that is one reason why the Qs this year have struggled, is because Apple has just weighed back the Qs as much as it has. Alphabet also hasn't had that great of a year. I mean, recently it had a pretty good run, but Apple is just holding this thing back. And that's the thing, is like, if Apple continues to get kind of dethroned and lag behind, Nvidia's roaring, Microsoft's doing okay, Meta's doing okay. Okay, and then the semiconductors are just kicking butt. So semiconductors are doing pretty good. But outside of that, we're seeing some weird things out of software side, some mixed signals, like high demand, but also high competition. That's at least what Adobe said in their earnings. So yeah, it's just kind of a weird space, and that's something I've kind of mentioned before on the channel. Like, if everybody has these NVIDIA, AI chips, then what's the competitive advantage? Like, they are living. You're buying the chips, and they're also giving you basically the AI framework. So what's the differentiator between each company that has all these chips? So that's something that we'll see further on down the line. I'm sure they're all trying to differentiate themselves. What's Adobe going to do different from procedurally generated Microsoft product or Google product, or OpenAI product? Like, it's going to be really tough. It's going to be very cutthroat, and I don't think it's going to be as easy as what a lot of people think. I just don't, and we'll get there eventually. I'm sure of that, but you just continue to ride the wave. As far as stop losses or anything, I would just leave it where it was. Just leave it here, kind of the lower ends of kind of March. Basically, if we come back down, we get through this level, especially here this next week. If that happens, you're definitely gonna see that pullback. So, other than that, I would just say, just be protective. But if we come down and just get through the lows of last week, you're definitely looking for a pullback. SPY. So one thing I did do on the SPY is I did raise the alert level from basically this candle day to the lower ends of basically just below last Friday. Okay, so that's kind of what I did here. And if we come back down, especially if we just come down on rapid days and break that, we're just going to set up, just like I mentioned on the Qs, we're going to set up for a pullback. That's it. Like, it'll be pretty clean, cut and dry. It's not going to be complicated. If we come back down and we don't really have any bounces, then we're going to come right through this level. We'll set up for probably some lower moves. But as far as like the RSP, the Qs and SPY, so I'm not going to say definitely looking for the pullback right here, right now. But what I kind of mentioned on the live stream on Friday is what I want to see is if the Qs, the SPY, and the RSP are all rolling over and selling down together over multiple days, and like they're all breaking, changing direction. That's what I would want to see. That's how I know the pullback is probably really coming, because everything's kind of getting sold, right? So I want to see not just from big tech, but also across the SPY, and then I want to see more than 50% or even more kind of selling off, which would be the indication that the RSP is selling off. So that's what I would want to see, and that's what I'll be looking for. Other than that, guys, just continue to ride the wave. Just move your stop losses, alert levels up, and yeah, that's it. Alpha hunters, y'all have a great weekend, and take care.